Well, we had two excellent speakers to kick us off for the rest of the afternoon. We still have got a lot to cover, and what I want to say is thank you to Ravi Menon to bring that aspect from the other side of the world, where we hear a lot about just transition and we worry how this is all going to land. But I think now we are going to turn into our second panel to even dive deeper for this topic, transition. And I just want to say a few words before I invite the panel. Firstly, the global shift to low-carbon economy represents tremendous opportunity, not only to address the climate crisis, but to drive long-term sustainable economic growth and resilience for generations to come. This holds true here in the UK, but also globally, around the world. Transition finance is a particularly important topic, which is close to my heart. And as Chris Hayward mentioned at the City of London Corporation, we launched, in partnership with His Majesty's government, the Transition Finance Council earlier this year. And we are quite ambitious. So I have the privilege to be the deputy chair of the council. And we are basically trying to advance and oversee the implementation of the market review that Vanessa Howard-Williams chaired last year, and we are making progress. I'm very excited about the discussion paper and the call for evidence that we will be launching later this week, so please stay tuned. And also, we are very ambitious about what's coming ahead, so we will have a September showcase about the Council's progress, a 6-month progress, so we will invite you all to that as well. So now it's my honor to invite the chair of the Transition Finance Council, who I work closely with, Right Honourable Lord Alok Sharma, to the stage, and then the panel who will discuss transition finance issues are Jill Lofts, Global Sustainable Finance Leader, EY, Natalie Blight, Global Head of Sustainable Finance and Transition, HSBC, Alistair Phillips-Davies, Chief Executive Officer of SSE, and Satoshi Ikeda, Financial Services Agency, Government Representative of Japan. Thank you, Alok.
Great. Well, Iram, thank you so much for that introduction, and it's a privilege and a joy, actually, to be working with you on the Transition Finance Council, so thank you for that. Thank you all for coming, and the great thing about this panel is that I don't have to answer any questions, which is the normal thing. I get to ask them. So, Alistair, maybe start with you. I mean, we just heard Ambassador Menon talk about the geopolitical challenges that we have, whether we're going to have a disorderly or an orderly transition. There's a lot of headwinds. What's happening in terms of the energy transition?
So I think you're absolutely right. Geopolitically, we can wake up every morning and see something new and different. And obviously, we even saw some of that over the weekend. I was delighted to wake up this morning and not see oil and gas prices having spiraled away. People are going to wait to see what happens in the Middle East. I think on the energy transition, there are a lot of different things going in different places. I've got more direct knowledge of UK and Europe. I think it is a bumpy ride. It's non-linear in terms of what we're seeing, but there are some big facets there. Essentially, the science is still there. The science is indisputable. At the end of the day, equally, I think electrification is just coming. It's just happening. We're seeing more and more of that. Governments have to wrestle with affordability, security of supply, particularly in these kind of environments. They've got to wrestle with climate change as well, and they're looking for growth and economic benefit out of all that. And I think that can still be done, but we are definitely in for a slightly bumpy ride in terms of where we end up. So we've seen, for various reasons, and essentially supply chain, that the lack of the peace dividend and the war, particularly between Ukraine and Russia, massive disruption of supply chains pushing up costs. You've seen required returns that many people will know about, risk-free rates and things of that nature coming in, and that has really disrupted projects in certain areas. So renewables projects, have definitely gone backwards. Some of the things like carbon capture and storage, and where we're looking for flexible, low carbon green, have gone backwards. Whereas networks are really coming to the fore at the moment, where they've got regulated, sustainable models where you know you can recover costs. Network build-out has been strong. So I think it's patchy in different areas of the world. You've seen China move to being the biggest deployer of renewables technology anywhere. You've obviously seen the US pull back, but that's for a period, and that's very economically driven. They can frack, and the rest of us can't. I think the big challenges for Europe are how do we rewire our energy system to avoid some of the implications of importing large amounts of fossil fuels that, with the exception of Norway, we don't have, and make sure that we take control of what we've got. We don't want another energy crisis where we're suddenly seeing 30, 40 billion pounds a year exported overseas, and we want to build a system of the future.
Great. So, I mean, just to, on this point, so basically what you're telling us is that the long-term decarbonisation trend, electrification trend is there. Then it may be bumpy, sort of along the way. But tell us in the short term, I mean, is private finance actually there? Because there's, I mean, you will know from your role that, you know, it certainly even in the UK context, it's been quite bumpy recently in terms of the commitment of private finance. How confident do you feel that private finance is still going to be there?
So I think private finance absolutely is there. We're the biggest issuer of green bonds in the UK. We remain there. We did our 9th one a little bit earlier this year, but still in, you know, turbulent markets. That was another 600 million euro hybrid financing that we did at that point. We've been out with shareholders just in the last couple of weeks on the back of our results. If you've got strong results, if you've got discipline about projects, and it's about that discipline on projects, so how do you put together projects that aren't going to end up in trouble where you've got the issues, let's say, of Thames Water, where bondholders are wondering whether they're going to see money. If you've got projects where there are good returns, and obviously one or two people in the sector have really suffered with their share price, but you've got a lot of others where there is discipline. We're having to rework our projects, work harder, and that's why I think coming up you've got the next offshore wind round. That will be critical. How much money is actually coming from that? You've got Ofgem coming out in this country with what are the returns going to be on what will be the biggest build of transmission in almost a couple of generations. For us alone, it's over 20 billion over 5 years. I think I see governments from the Netherlands to Denmark going back looking at, well, do we have to put some more subsidies or some more regimes in place to help make sure that we can build these different assets? So I think all of those things are happening and people are responding. Policymakers and regulators are responding to what's required, but it is just bumpy and we have seen a bit of a hiatus.
Okay. I'm going to come back on electricity prices, particularly since the government's published its industrial strategy this morning, focusing on electricity prices. But Julian, maybe I can turn to you, which is, you know, EY has been working very closely with the TFC, the Transition Finance Council, and looking at basically how much transition finance is actually being deployed. So can you tell us how much money is actually being deployed? Where is it being deployed from, and which jurisdictions is it going into? And particularly, I think, give us a sense of you know, how much of this is going to hard-to-abate sectors as opposed to you know, technologies that are already commercially viable.
Sure, thank you. I suppose I'd start off by saying we have heard quite a lot of numbers this morning quoted. I guess we feel it's important to baseline initiatives, to look at the velocity, to look at the gap, et cetera, and obviously the discussions that we've been having with the TFC have been along those lines of, let's find a baseline that we all feel relatively comfortable with, and then we can start to measure the progress that we're making. And we've done that in other fields like blended finance, et cetera. So I think for me, the sort of idea of quantifying something, understanding it and seeing, you know, therefore, where are the bits that we really need to take some action are quite important. So the data that most closely matched the TFMR work was the Bloomberg New Energy Finance data. And so we've been obviously working with yourselves and with them on analysing what does it look like. So we reckon it's about, for 2024, about just over 2 trillion globally, with clearly China leading quite significantly at 118 billion, which is about 4.5% of their GDP. UK's fourth which is very good news for the UK, at around 65.3 billion, which is about 1.8% of GDP. And of course, US, you'd expect, is second at around 338, which is just over 1% of GDP, and Germany is third. So I think from a UK perspective, very well positioned on the global stage. Debt is a major part of that, so that's about 64%. And interestingly, equity has fallen quite significantly over the past 3 years. So I think highlighting the ways in which corporates are raising the funding for the different, decarbonisation initiatives. To which regions? So the data that we had from banks from 2023 in the UK suggests that that's about 54.8 billion was raised for clean tech. Most of that went to Europe and the US, as you'd imagine, with only 2 billion out of that 54 going to emerging markets. So that shows quite a significant gap. And then when we look at kind of the types of financing, which sectors, this isn't great news, I'm afraid, 93% going to mature technologies, like grid, like clean energy, like electric transport, obviously only 7%. And in the UK, we mentioned it a little bit earlier with nature and agri, but of that 54 billion UK banks, only 2 billion went to agriculture in the UK, so quite a significant gap there.
Okay, great. Well, thank you for that. So, I mean, I think some sort of positivity to take from that, but obviously still a long way to go. So, Natalie, I just want to pick up on this whole issue of financing from an HSBC perspective. Can you, I mean, two questions really. One is, can you give us a couple of examples of where HSBC has financed a hard-to-abate sector? And, maybe that's not in the UK, and you think, well, actually, that's a great example, that's applicable more internationally. And the second point, just to pick up on this piece, Natalie says that, that Julian says, that the money is moving, but actually it's really not moving very much at all in developing economies in the global south. So when, as a global bank, you look at financing, do you have a different lens through which you look at developed country financing as opposed to developing country financing?
Okay, all right. So first of all, what I can say is that we had our record year last year, actually. So we did 99 billion of sustainable finance, supporting our clients' transition. And we are absolutely doubling down on the commercialization because we see this as a huge opportunity. It's why I have my role. To get specific around where did that 99 billion go, we're really looking at three critical drivers. One is those critical industries for transition, clean power, electrification of transportation, and the data centers, actually. There's no smart grid without data and data centers. Being that trusted transition partner for all our clients, as you said, including in the hard to abate. So I'll come on to an example, and then I'll explain what makes these investable and bankable. And then the climate tech that we were talking about as well. Climate tech actually is, we're really focusing on the nascent stuff. So we've got $1 billion to deploy there. So you can see it's actually in our profile rather smaller in terms, but it has more impact. Bringing some examples to life and why they're bankable. The one I really like, I'm born in Sheffield and brought up in an environment around steel, very up and down industry globally. It's in Sweden, actually, SSAB. Huge numbers here, billions, to bring an old-fashioned, huge emissions steel mill to state-of-the-art fossil-free using a couple of electric arc furnaces. It reduces their emissions by 90%, the whole of Sweden's emissions by 7%, improves their operating costs and their financial terms, the commercial reality for there. So you get this really nice sweet spot. But we couldn't do that without collaboration and support, whether it's ECAs, guarantees, grants, etc. And then closer to home, but that's a hard to abate sector. A few years ago, people were saying not possible.
Absolutely.
Is possible. So billions are going into this one, and we should cookie cutter that and take it around the globe. And then closer to home, closer to where my real home is, the Teesside. For years now, with sort of government support and initiatives, what we've got there is what I would call foundational infrastructure on the sort of carbon transport and storage in the Northern Endurance Partnership. I think that's a few billion. We've also got the Net Zero Teesside, which is a gas-fired plant with carbon capture. Now, I know some people will feel, well, we shouldn't be doing that. We need all the tools we've got, absolutely. Because you've talked about how bumpy and non-linear this is. So another few billion. Again, what collectively made these investable for banks is that balance between sort of risk and reward and returns, and getting the sort of the governments aligned. We need to have policy, legal, investment frameworks that work. We need to know where governments want to do what and when. We need sort of support, guarantees, ECA-backed, etc. And then in the emerging markets, you were talking about that, it is different. I mean, banks judge the returns and the sort of the risks. They're balancing that. That doesn't change. But the profile of the risk change. And therefore, we have to sort of take that in consideration. And critically, in the emerging markets, you also have quite small deals, quite fragmented deals. So what we need is a system where we can aggregate them and diversify and spread that risk and make them sort of investable as well. And then I'm really hopeful.
So you're thinking of some form of securitization, then, are you?
Sort of the stuff we've done with Pentagreen and Temasek to sort of pull lots of sort of smaller deals together so that an investor sort of can come in upfront and sort of spread the money out. But I'm really hopeful, because you're absolutely right. There have been blockages to the appetite for private investors going into the emerging markets around infrastructure. But this sort of great transition that is needed could be the once and for all opportunity to sort of solve that with these sort of frameworks and support.
Okay. Satoshi, thank you for joining us online. Hopefully you can hear me. If I can just turn to you, just picking up on this point about emerging markets. Obviously, the Japanese government has been pretty focused on promoting transition finance and sort of working with other countries in the region. Can you give us a sense of basically what are the learnings that you've had in Japan, and talk a little bit about how you may be applying that to other markets, particularly in Southeast Asia?
Certainly. Thank you for that question. Well, first of all, I would like to talk about the issue of green transition of the steel industry, building on what Natalie said, because at the end of the day, that certainly risk return formula applies to the financial institutions in general, but it also applies to the business companies. And so in designing the transition finance, there should be a certain risk-return justification for climate transition at the side of the financial institution. But at the same time, business institution or business firms need to find their own risk-return justification for doing so. And taking the green steel as an example, green steel is made of green materials or green process of manufacturing steel. But at the end of the day, that the function as a steel is the same as brown steel. So who would buy green steel with a higher cost? That is a very much question. So it is very important to put in place a kind of enabling environment for financial institutions and businesses altogether. And in that sense, we believe that the carbon pricing mechanism or emission trading system is very much critical, so that the kind of greener steel would be rewarded in terms of the carbon pricing scheme. And so that applies to the overall Asian context. Of course, the Asia faces a tougher challenge because their starting point is the huge use of coal-fired power plant, coal energy. So they need to fundamentally transform their energy system and associated kind of a manufacturing system because at the end of the day that the Asia has attracted the kind of hard liability sector from other parts of the world, including US, although US now wants some of them back to their home. But so designing the proper energy transition journey with a combination of certain carbon pricing schemes, which Ravi mentioned as a kind of transition credit, is very much critical. So that is what the Japanese government is pushing for in the context of Asia region, together with other enabling mechanisms such as the blended finance joined by Asian Development Bank or the JICA, that is the development agency in Japan, and so on and so forth. So at the end of the day, that the kind of economic logic will prevail. So while we need to pay proper heed to the alignment with net zero transition pathway, but at the end of the day, what moving the real project is the economic logic and risk return formula. So that's certainly what we have learned from our efforts to push ahead with transition finance in the region.
Great, thank you for that. Just a couple of quick follow-on questions. So I remember back in 2021 in discussions with the G7 ministers, we managed to get everyone, including Japan, to agree to not finance any more new coal internationally. So I guess the first question from my side is that has that held? Is that still the case? And the second issue then is that, I mean, you've talked about some of the mechanisms to support other countries in the region. How confident are you that actually we are going to see a sort of orderly energy transition in Southeast Asia? Because, I mean, the reality is that that is a region where unless you deal with the issue of clean energy, emissions are basically going to go through the roof in a global context.
Yeah, certainly that the commitment to not using the coal is still firmly held, I believe, at least in the ASEAN region and Japan, Korea. But certainly Asian region is facing a difficult job because, as I said, that they are still heavily dependent on the coal. And moving ahead, there needs to be a kind of a total revamp of the grid system. That requires huge finance. So, but because the current grid accommodates so much coal-fired power, some European investors view that investing in revamp of grid as a brown project. So that's where the transition finance play a critical role. And when I talked with the many Asian authorities, they certainly are aware of the need for move ahead for climate transition. So I'm personally pretty confident that the things would move ahead in a few years' time. But certainly it requires a proper arrangement of transition finance mechanism so that the necessary project would receive a proper amount of financing for climate transition.
Great, thank you for that. That's encouraging. Alistair, can I turn back to home, to the UK? So I said at the start of this discussion that obviously the government's now come out with this industrial strategy, talking about reducing energy costs for industry over a sort of 10-year period, and aligning that to sort of our domestic politics. So, one of the arguments that's made by those who don't believe in this agenda is that somehow renewables are driving up energy prices. Can you help us debunk that particular myth, firstly? But secondly, I mean, from your perspective, do you think more needs to be done to bring down not just energy prices for industry, but actually households as well?
Sure. Okay, two really good questions. So I think currently, if we look at the sources of energy that we have in the UK, you can indeed build wind farms, offshore wind farms, far cheaper than the current wholesale price. So there's no doubt that renewables, one, not offering the flexibility that some sources of energy do, you can definitely get it cheaper. I think equally we've seen with nuclear, although nuclear is obviously a low carbon source of power and has its place, every single type of generation that we've got is going up in price. So, originally we had the original nuclear contract at £92.50 in 2012 prices. The last auction cleared in this country at just under £60. Indeed, we're building the world's biggest offshore wind farm at just over £40 on the same basis. And so I think we will see prices continue to rise, but I suspect those nuclear prices will also go much higher when we get to the next round with Sizewell or whatever, if somebody puts that pounds per megawatt on it. That the last major piece of flexible generation kit built in the UK, we built at Keadby 2, which is about 10% more efficient than any other plant in the UK. Now, when we built that, we paid a bit under 400 million for it. Today, I think it'd probably go north of 900 million for the same piece of plant. It's difficult to even get access to that. So I think the costs of everything are rising. And for the UK, and all of Europe, we don't have the options to frack gas like they do in America. America's going to have reasonably cheap gas, a third or a quarter of the price that we're seeing in Europe at the moment, and that will happen for a good period of time. But fracking just doesn't happen elsewhere. We have to build the sources of energy that we have control of, and it's certainly been a huge turnaround in American fortunes over the last 15, 20 years, that rather than having carrier groups stationed in the Middle East trying to work out how they get enough oil and gas out of there and other places, they've now become a major producer of that. So for us, it's definitely, as I said earlier, wind in Northern Europe, solar in Southern Europe, and then possibly a scattering of nuclear for those people who want to do it. And then the more expensive stuff will be the flexible things. But at some point, if you invest in this, we saw offshore wind come down over 60% in price, partly doing your time in government as Secretary of State. You've got to invest in these technologies to bring down the prices, and obviously one of the key things is get some of the investment in the UK as well. So I think that's the first bit. I think obviously affordability or prices for consumers, prices will come down on the 1st of July. They're down by about 7 or 8%. I think pre the activities over the weekend, we saw prices continuing to come down as well this decade. There's a lot more LNG coming on board. Gas is clearly a big transition fuel for all sorts of people. So I think there are a lot of reasons to be optimistic around being able to hit the sort of predictions around prices coming down out to 2030. But a key part of it is not to expose ourselves to, I know in 2022 we estimate the difference between the energy system of 2030 and the one we had in 2022 was worth about £30 billion to consumers off bills. That's the critical thing. Get the prices to come down a little bit, which they are, and then keep them down by having our own homegrown sources.
Great, thank you for that. So I'm going to ask the same question to both Gillian and Natalie, and maybe Gillian, you might want to go sort of first on this, which is that what does the UK financial service sector want from government to make it easier for them to deploy transition capital? And I mean, Natalie talked about some of those, but it'd be interested in your views. And then the other issue is the role of having a sort of credible transition plan. Mm-hmm. How important is that in terms of people being willing to lend to you on if you're looking at transition finance?
Thank you. Yeah, so I've kind of decided that I can't say they want money, because public funding in general, I think we'd also have to work around that. So, and Natalie did touch on it. So clearly, certainty, confidence, commitment in one bucket. Industrial strategy is probably helpful with that. Sector-specific action plans will be helpful. Just anything that provides some level of confidence over what is going to happen in the slightly longer term, I think super helpful. The second bucket I would go through is just partnering. And so, you know, there's a fair few initiatives, clearly. TCF, we've got the Global Clean Power Alliance. We have also the recently launched Investor Task Force. Yes. So I think those are really helpful for both defining the partner stack and the capital stack. And what do I mean by that? And a lot of people have talked about this today. You know, you get groups of different businesses working together to try to mobilize the funding. They're not often groups that are used to working together. They maybe have different objectives and things like that. So understanding, codifying the different partner stacks required to mobilize the capital, I think, is really important, as is the capital stack, because again, that's very different depending on what you're doing. So we talk a bit about investable NDCs and different countries having that. It'd be great to start to think about what that looks like, because we go to a lot of conferences and people talk about what does financial services need, blah, blah, blah. Maybe start to move towards, you know, what is an investable NDC playbook? And then for the initiatives that are driving this, you know, what does a capital stack look like? So how do we actually execute on it, I think is really, really, really critical. And one thing that we mentioned when we were preparing for this panel, which I think is also worth us really thinking about, is engagement with the population. We still talk about it in a really technical fashion, and it really isn't engaging for most of the British population. Right. So how are we going to change the narrative? How are we making it more exciting? How are we going to make everybody feel like this is something that's needed, rather than something that's left to the technical experts?
Yeah, absolutely.
Yeah, sort of building what Jill said, it really is projects that are de-risked and making sure that we can sort of bring in all the players who are able to sort of take slices of this risk, and probably slicing and dicing risk for these projects differently than we have done before. I mean, the National Wealth Fund, UKF, they've all got roles to play. And once we know where the government wants to go, there's certainty and clarity around it. A bit like what, you know, okay, it's taken a few years now around Teesside, what's happening there. Then we can start to sort of deploy. These are huge numbers that we have to crowd in a blended finance way. And, you know, even a small grant can make a difference on the equity component of it. And then the blended finance is critical. So it's the alignment, the rule of law has to apply, and the support as well. Less so the aggregation factor in the UK.
Very good.
And I was going to say, you also mentioned, sorry to interrupt, but...
This is the best kind of panel, they just talk amongst themselves.
Out of control. No, but you also mentioned regulation.
Yes.
And I didn't pick up on the transition plan. So I think as well, just to add in, so the reporting and disclosure regulation, greenwashing regulation, and I mean, I'm sure you would say this, but information on a corporate's transition plan and the means, if they have a credible decarbonisation target and ambition, and then they build a transition plan off the back of that. I'm imagining that's quite helpful.
I mean, it's very important to us. We have over 1 million corporate clients. We need, just from a prudential perspective and managing on our own risk, we need to know that these corporates are going to be sort of viable in the future and competitively advantaged by their transition plans. So the amount of work and investment that we've put in internally to be able to sort of effectively digitize getting transition questionnaires done, getting scores out of that, granular detail on their sort of plans, so we know how we can sort of help and lean in and help the sort of the transition. Okay. Back to your point, it's just not going to be linear.
Okay. Sergi, can I just turn back to you? Just talking about transition plans, where are the big Japanese corporates in terms of their transition plans?
Certainly. Actually, among the business corporates, that the devising the transition plan is certainly popular right now in Japan. Actually, in the introduction of emission trading system in Japan from 2 years from now, probably, there will be a certain mandatory requirement for devising transition plan for mandatory participants for emission trading system. So we connect the emission trading system with the requirement of transition plan. so that, as I explained earlier, that there would be a proper mix of transition finance measures and carbon pricing measures. And so, at the end of the day, that those kind of a trend has been facilitated by the Japanese government's efforts to design the sector roadmaps or sector plans for hard-to-abate sectors, how actually they would make a climate transition in coming years and decades. So that is pretty much linked with the government efforts and the government's program, which includes certain subsidies amounting to 20 trillion yen, which effectively means 100 billion UK sterling. And so those kind of ecosystem will eventually enable the transition planning by business firms and financial institutions. So without those other measures in place, it is a bit tall order for a business firm to ask them to come up with the credible transition plan. So I think it is very critical to have a government strategy, government policy in place so that business firms are comfortably going along with that kind of thing. And that also applies to the in the context of region, because actually Japanese businesses value chain span across the Asian region. So actually when they design the transition plan, they require government strategy in the region, in the countries in the region. So that's where we are struggling. So that's why I would say the partnership with the countries in the Asian region is critical, so that the Japanese businesses can come up with a credible transition plan based on the credible government plan in the region.
Great, thank you for that. Right, ladies and gentlemen, I've got time for maybe one, maybe two questions from the floor. If anyone has a burning question, and a question please, rather than a long statement. Any questions? No, we've stunned you, have we? Okay, yeah, we've got a question. Is there a mic? Sorry, can we turn
the microphone on?
Turn on the mic. Good shout.
So I've heard a lot about steel and coal and various financial initiatives, but I haven't heard much about artificial intelligence, which has the potential to really explode our energy use and challenge everything. I just wondered whether people had some comment about that.
Yeah, good question. Data centers. Who wants to talk about data centers?
I can
okay, please.
have a crack and everybody can all
it.
build in. I think data centers are going to be actually critical. I mean, first of all, you're absolutely right. The energy demand is going to be sort of huge. The hyperscalers are much less sensitive to energy price. And what they're really wanting is really resilient, consistent, reliable energy. So like you've seen in the US, Microsoft, Google, et cetera, look at sort of unmothballing the nuclear, probably sort of private energy supplies. So they're less sensitive. But in terms of the advantage of clean, efficient data centers and AI in the role that that's going to play on getting to net zero in an orderly or disorderly fashion, absolutely critical. You're just not going to have the necessary sort of smart grids without it, and we need the smart grids. You're not going to have precision agriculture without data and AI. From a bank perspective, we're not going to understand the first, second, third, fourth order impacts of physical risk without data and AI. So these data centers, maybe on one side of the equation, look like they're going to be a sort of a major sort of force for energy demand, but on the other side, they're actually going to be super and essential to hit net zero, which is why it's one of our priority areas to sort of focus on.
Yeah, It's a huge topic, so I'll be reasonably brief. I didn't really touch on demand, but demand in Europe is anemic at best, generally, for electricity, although there is significant growth in renewables and low carbon generation backing that up. That's partly because of costs in Europe, so the underlying real economy, which is quite strong in the US because of cheap energy prices, is probably being supported by data centres, things of that nature, and we really see that in somewhere like Ireland, which has a huge penetration of data centres. I do think you made the point about them not being terribly price sensitive. What we are seeing is that those hyperscalers on the positive side, because they're willing to go out into the market and they are funding a lot of green projects, virtually every piece of kit that we're building anywhere in Europe, we've got hyperscalers interested in taking contracts from them. And as they're less price sensitive, that drives investment and innovation in technologies and can drive us to continue deploying more green projects at the moment than we might otherwise because of the desire for that. I think you're absolutely right in terms of what you say about industry and society generally will benefit hugely from AI and the adoption of it. But I think equally we'll see hyperscalers driving some innovation and driving more build in the renewable sector because they have a huge desire ultimately to get to 24/7 green, so flexible green energy.
Great. Well, we've only got a minute and a half left, so I'm going to ask one last question from our panel. So very briefly, tell me, on a scale of 1 to 10, where 10 is a totally orderly transition and 1 is, oh my God, it's really not very orderly, where do you think? Where do you think it's going to go? And please don't say 5, because that's boring. 10 totally orderly, 1 not orderly at all. Who would like to start? Alistair, do you want to start?
Fine. Look, I'd like to say 6 or 7, but at the moment we're in the 3 or 4 bracket. You know, it's definitely a little bit more bumpy and choppy. And so ultimately, probably, given what I've seen recently, I'm less than 5. It will just be bumpy and choppy and people have to flex.
Okay.
I'm 3 or 4, but I'm optimistic that we can be suitably agile and need to be suitably agile to sort of find the sweet spots.
Okay.
I'm going to say 6. I have huge concerns, but we recently did a survey of 200 executives and board members across European corporates, and this is the first time that they've really started to talk about the benefits and the commerciality of sustainability to their businesses, particularly in product innovation, which I think is fabulous, but then also the stability of their businesses themselves. So, yeah.
So, Toshi, what number do you give it?
I agree with the 3 or 4 rating, but I hope for 6.
Okay, great. Thank you for that. So I think you've averaged that out, we come to 5. Ladies and gentlemen, can you put your hands together for a really stellar panel? Thank you.